Good morning. Let's have a look at some of the big stories which have moved the market so far this morning. And really, we're looking at Brexit headlines as always. We're looking at what happened yesterday with the EU and Theresa May. And really, we need to go back over the last week or so to have a little look at and just see exactly what's dominated since Tuesday, really. And if we look back to Tuesday was all about Jerome Powell and his first performance as Fed chair. And really what we saw from him was nothing new, nothing particularly special. Everything that we'd heard was exactly the same as what we'd heard previously. So the fact that we saw such a big market reaction was a bit of a surprise because really all he did was toe the line and really repeat what the FOMC meeting minutes had said from previously in that February meeting. We're still looking pretty much nailed on for a March rate hike on the back of all of these comments recently, and the probability of a fourth rate hike into 2018 has jumped a little bit. It was at 36%, now at 40%. So if anything's changed, it is just that probability of a rate hike. We're more nailed on for the fact that we are going to see maybe slightly more than that. But of course, what he also mentioned, there was two points he mentioned, was one, the fact that market volatility or recent market moves weren't going to derail anything that any plans on monetary policy. And he also again reiterated that inflation, yes, it was low, and later this afternoon we will see the next instalment of the US CPI, but they expect it to go back to around that 2% level fairly soon. So with that in mind, it was pretty much as you were. Nothing we hadn't heard previously, but we saw big market moves. And we're still seeing those market moves happening throughout the dollar pairs. Now, looking at yesterday we saw this news from the EU talking about Brexit, talking about this potential mess, which is Northern Ireland, Republic Island, and the border which we do have there. Now, again, everything that came out yesterday was nothing new. Did anyone actually expect Theresa May to stand up in Parliament and say, yes, we accept everything that the EU has put forward? No, of course we didn't. But the moves, and for me, the moves are a bit overplayed. That we've seen some enormous falls. We saw some big breaks of downside levels, and again this morning we've seen a continuation of that negativity in sterling. So we broke double bottom levels at 38.50s. We broke double bottom level at 37.95, and all of these we looked at as potential key turning points or an area where this could potentially hold up. This morning there was another one we were looking at 137.40, which is about where we're trading at the moment, and then 37.20s is the last real level that we can hold on to before this looks particularly ugly and particularly negative going down. So there's a lot of downside that's coming here, but is it overplayed? This is the question, and it has been incredibly negative. But as I say, there's nothing new here, and the problem is, it's not necessarily the headlines or the negativity or the fact that the European Union are now playing hardball over this Irish border. The issue is the uncertainty, and what becomes clearer on a daily basis is that nobody has any idea what Brexit means. Theresa May, David Davis, Michel Barnier, the EU in general, nobody has any idea what it means for Britain, what it means for the EU, and that uncertainty is what causes these big market moves. And that is incredibly hard to guard against and to trade around these sort of areas and to trade in cable when there is so much uncertainty. And we knew there was going to be big political risk this week because we had what happened yesterday and Theresa May's speech on tomorrow on Friday. We had Jeremy Corbyn speaking earlier in the week as well about how he was really trying to side with those Tory backbenchers, those Tory Remainers who were fighting against the PM and trying to rally those onto his side. So with all that Brexit and political risk coming in, it was always going to be a bit of a big week for cable. But the fact that it's been so negative and what we've heard hasn't been anything particularly new just shows that it's all uncertainty, and it is all Brexit risk on basically an uncertain future. That's likely to continue, and into tomorrow what we expect to see, of course, is Theresa May to really play the UK's arm in this and really give us a little bit more upside in terms of the bullishness that she will have around the UK economy and around the UK's political position going forward. So you can't really rule out going forward the fact that we could see some kind of bounce over the next couple of days when Theresa May gets up and speaks tomorrow. So, but then, of course, the fear is that she disappoints. But looking at this market at the moment, it is incredibly negative. We're looking 37.23s is the exact low that we're looking at the moment. But still, it very much is last gasp in terms of cable, and a break below there would really open us up to levels back down at 36. We'd probably get 37. The figure acts as a little bit of support, but then 36.50s, 36.55 could really be the downside level that we have to look out for. So with all of that news around Brexit, sterling becomes incredibly hard to trade. Now, we are seeing a bit of negativity so far today, and of course yesterday, US equity markets closed particularly negatively. We saw a real late sell-off. Dow down 380 points. Let's double check these for you. 380 points down for the Dow. The S&P down, let me have a look. S&P down 30, Nasdaq down 57. Overnight in Asia, we saw the Nikkei trading down as well. So there was negativity around that. Bond prices, the US 10-year jumping to 2.84. So again, there's movements around that area. I've been looking towards other pairs as well. We look at euro dollar. Now, euro dollar has been an interesting one this week. We have seen moves, and again, it's a dollar positive story. There's the dollar bulls which are really pushing that pair to the downside. But there's also, again, political risk for the Eurozone, because this weekend we have the Italian elections, and those Italian elections will happen on Sunday. And again, that's very much a fact. The factor there is really looking at the immigration risk. The immigration area has been a key battleground in that, really the only battleground in that Italian election at the moment. The economy has played second fiddle to the immigration stories, and again, what do we expect in terms of a euro move over that election? It's very difficult to see, but I think it's almost a matter of playing into Friday, see where we are, and really there will be a lot of traders taking positions out of that euro over the weekend, just in case we do get some kind of risk, just in case we do get some kind of different reaction coming in on Sunday, which could cause big moves on the open on Sunday night. So it's almost a case of just being a little bit more cautious on euro as we go forward. Now, as I said earlier, later this afternoon we do have a lot of data, and it is CPI again. I've already mentioned Jerome Powell. He came out on Tuesday with his first performance. Now, he will speak tomorrow as well. He will speak again, testifying the second time, his second appearance as Fed chair, and it will come at around the same sort of time or a little bit later than the CPI readings are coming out. Now, CPI for the US it's been a key battleground in terms of monetary policy. We know that. We've had Janet Yellen continuously saying that, yes, don't worry, inflation will move back towards that 2% target. It will not derail any rate hike plans, but we've already seen it start to slow up some of those moves and moves around reduction of the balance sheet as well. So it's always interesting to keep an eye on that CPI figure, just to see where we're going. Expectations are today for some particularly some particularly big moves around this area, and it could be interesting to see exactly where we go when we do get those numbers. But again, we're looking at sort of 1.5% around that inflation area. So it's going to be interesting to keep an eye out for it. It's going to move the dollar, because again we've got this focus, and the focus isn't on March meetings or anything else in the near term. It is all around this fourth rate hike story, and as we said, we're at 40% in terms of that probability for a rate hike, a fourth rate hike this year, and that would come sort of November, December time. But now, anything in terms of away from expectation figures or any Fed rhetoric or Fed speakers that are being a little bit more dovish only really pushes us on that fourth rate hike probability rather than anything shorter term. Shorter term rate hike data is looking particularly stable. I mean, if we look at what we're looking at for the US, we're still at, it's dropped actually from 100%, we're now at 96 96.4% probability of a rate hike happening in March, so pretty much nailed on for that. We then look to 72% chance of a rate hike in June. So that's what we're looking at there. But inflation data does have the potential to derail some of that. So it's going to be closely watched. But really, today could be a case where we kind of just sort of come away a little bit with that core PCE data will be released later, but it could be a day where there's a little bit of a lull because we've got Theresa May's speech and Jerome Powell yet again tomorrow in focus. So that's going to be the key one for us to look out for. Just look at some of these other prices. We are seeing, as we said, cable trading 137, around 137.50s, bouncing a little bit off those lows. Euro dollar at 121.90s. Gold trading 13.11. And US futures, just quickly looking at US futures and how they're expected to open up later this afternoon, and we're still early here, but expectations are that will be a negative open following on from that negativity that we saw yesterday. So looking at around 80 odd points on the downside on the Dow, 7 points for the S&P, 7 big points for the S&P on the downside. Oil prices trading 61.30. Bond price is still that little bit more stable, so it could be a case that we kind of tread water, especially for the early part of today's session.